Hello there, folks. We are live. I'm Mitch Goldberg with the wealth management firm Client First Strategy. Thank you so much for joining today. This is a new live episode of Be the Boss of Your Money. We've got a couple of things to cover. The idea here is to bring you value every single day. We talk about business, personal finance, investing. Today is no exception. What an interesting day in the market. I actually think that today was the most positive day that we could have possibly had, in spite of the major averages barely being down. What else today? I've talked at length about what goes into calculating your credit score or your FICO score. Your FICO score, the Fairchild Isaacson Corporation, the Fair Isaacs Corporation, FICO. That is really important because if you know what goes into your credit score, then you'll know how to manage it better. But sometimes you have to know what doesn't go into your credit score. So we're going to talk about that. And then I want to talk to you a little bit about investing in innovation. It's a lot harder than it sounds because innovation could mean, in so many cases, hit or miss. So let's roll the intro, and I want to wrap this up in 20 minutes. All right, we are back. Let me just do a quick share screen for you, show you how the averages did today and why I think that today was such a good day. The Dow is up 26 points. It's nothing. I mean, a fraction of a percent. The S&P was barely up, a little bit more, almost a 0.5%. NASDAQ had a pretty good day, 1.23%. The VIX was down a little bit. The VIX had been up about 2 or 3 points today, and it wound up closing down a point. It just goes to show you that when stocks were down today, the VIX, the fear gauge, didn't really go up much. It wasn't much of a pop in the VIX, not as much as you'd expect. And the reason is, the reason I want to say is, today was a much better day in the stock market because after seeing all the news that came out this weekend in terms of, it was just a very negative week. We already had states reopening, good news on Gilead's drug remdesivir, possibly a few vaccines in the works by the end of 2021, maybe sooner. So the point is, earnings were awful. Unemployment claims jumped past 30 million in 6 weeks. The PPP program, it's coming out. It's good. It'll help for 8 weeks. Don't forget, a lot of people are happily on unemployment right now because they're making more money than when they were working. Right now, a lot of money's flowing into the big, stocks, the top 6 stocks. That's Facebook, Amazon, Apple, Netflix, Alphabet, and Microsoft. Okay, those are the heavyweights. You take those out, I think the market would be considered, a little bit could you lower, but that's the kind of environment we have because people keep asking, why isn't the stock market reflecting how bad things are in the economy? The stock market is already looking past the worst case scenario to better times than we have now. Maybe not as good as they were before this. Keep in mind, in the middle of February, a little over 2 months ago, we were at all-time record highs in the stock market. The economy was going pretty good. Unemployment was really low. I mean, it was tough to find qualified good help. It was actually tough. People getting jobs left and right. It just the suddenness of how things turn around really is shell-shocking. And if you're one of those people who's still shell-shocked, I don't blame you. Okay, no one can blame you. I think we all are still a little shell-shocked. But the reason I think today was such an important day is because after the negative week we had last week ended on a down note. Dow lost about 1,000 points between the last day of April and the first day of May. We had a down over 600 points on Friday, and it looked like that was going to continue. The futures last night were down about 300 points. The market was down over 200 points today in the Dow. And then we had a rebound a little bit. All of a sudden, the NASDAQ popped into positive territory, then the S&P 500, and then the Dow. We ended up having, a flat day to, slightly, ever so slightly to the upside. But what could have been a lot worse. And it just goes to show you that investors have, to me, looks like they stopped giving the old heave ho to stocks, because once stocks were down this morning, it looked like they could have kept going. The VIX, the panic gauge, the fear gauge didn't really go up much when stocks were down. In fact, you want the VIX, the part in the red over here, that part here. Can you see that? You want that to be red. So overall, this day could have been a lot worse. What saved it? What saved it is oil. Okay, oil was up today. And now that more states are opening, other economies are opening, all of a sudden, you're seeing people fill up their tanks. I mean, I can tell you anecdotally where I live, right along, and where I live and work along the Route 110 corridor of Long Island, which is a pretty busy place for commerce. It's little places, places like that all over the country, about 35 miles outside of Manhattan. There were a lot of cars on the road this past weekend. People are filling up their tanks. The parking lots are full of some stores like Costco and Target. People are getting out. People are starting to use gas. You want to see gasoline sales rise. That's like a major indicator that business is picking up, and it's starting to pick up now. So what else was significant today? Let's take a look at some of the Dow stocks that helped. ExxonMobil was up $4. Chevron was up over $2. Microsoft was up. Home Depot was up. Apple was up. Cisco, Travelers. These are the kind of stocks you want to see up. Okay. What was down? Look, Verizon, Merck, Procter & Gamble. I call those the COVID stocks. It's a shame that Caterpillar was down, and Raytheon. That's a new name in the Dow Jones Industrial Average. It used to be called United Technologies. They merged with Raytheon. They spun off their air conditioning and elevator business. So now it's just Raytheon Technologies. So major defense contractor in the Dow Jones Industrial Average. But overall, a mixed day, but it could have been a lot worse. But if you look at the market movers today, Phillips, Valero, Marathon, Helmerich and Payne, Holly, Frontier, Apache, Marathon, Diamondback, National Oilwell. Then you just have Advanced Micro Devices, but then EOG and Hess, almost, with the exception of one, all the top gainers today in the S&P 500 are energy stocks. So, what a reversal. Just when everybody sold them, it just goes to show you being all in or all out is not a strategy that I want to go with. And I want to talk to you quick about Warren Buffett, because everyone heard, over the weekend, oh no, Warren Buffett, he sold his stocks. He sold his airline stocks. So terrible. Okay. Just so you know, I just did a quick calculation here with my pen and paper. I even did the addition in my head. It was not that hard to do. $42 billion. If you take the market cap of United Airlines, American Airlines, Delta, and Southwest Airlines, it's $42 billion. $42 billion compared to $1 trillion, of Microsoft market cap or Amazon, Apple. Now you know why these stocks don't move the market. Macy's is about a $4 billion market cap. So what? I think Macy's is close to getting booted from the S&P, by the way. But these stocks have no impact, because the bigger the price, the bigger the market weighting of a company, the more of an impact it has on the S&P 500. So that's why you could see these companies like airlines go under, or maybe not go under, but get reduced tremendously in value. That's a nice way to put it. And that's why the market keep going up. The big news today came out after the close. So this is something to keep an eye on. California is going to start opening up, I think, this week. Sometime between tomorrow and Friday. They're going to go in phases. A lot more businesses are going to be able to open up. There'll still have to be, social distancing, and companies taking great pains to maintain social distancing with their customers, curbside pickup, etc. But the point is, when California opens up, after Georgia, after Texas. That's, that again, it removes worst case scenario. Now, if you've been following this show, I call it Be the Boss of Your Money because I want you to be the boss of your money, not your money being the boss of you. If you follow along here, the thing that I've been talking about are to upgrade and the downgrade, take a shot, get rid of some of your losing positions, companies that you thought were really good that turns out they weren't so good in your opinion, and upgrade them, upgrade that money into better companies, better stocks, because you see the better stocks are what are holding up and continuing to either hold their gains or make new gains. So we've been talking about that a lot. We've also been talking about don't just buy a stock for the heck of it because, oh, hey, it was down a lot, it'll take a big pop. Because too many times you could be wrong. Make sure that whatever you purchase, be it an individual stock, an individual bond, an exchange traded fund, a mutual fund, make sure that it has a place for you in your portfolio. Okay, that it offers you some benefit in the way it fits with the rest of your holdings, because that is always the right decision to make, regardless of what the stock or the investment you made does over the next few weeks or months. So we want to get you out of kicking yourself and asking yourself, why the heck did I just buy that investment? We have to cut that out. Okay. And so I want to talk to you about credit cards. I made a video about how your FICO score is calculated. It's less than 2 minutes, but it tells you everything you need to know. Because if I'm going to tell you what doesn't need to go into your credit score, if I tell you what is not used to calculate your credit score, I think I have to include what is included in your credit score. So here goes what's in it in 2 minutes. I couldn't have said it better today than I did a few months ago. So I'm going to roll this video right now. Take a look at this. Again, less than 2 minutes. It'll tell you what your credit score is made out of. So then after that, we could break down what doesn't go into your credit
score. Is your credit score better than average? In a world of consumerism, if you want to have a better than average shot of getting the best interest rates, then you need to have a better than average credit score. I think it's so important for you to know how your FICO score is calculated that it's become the subject of this week's Monday Money Tip. When people refer to their credit score, what they usually really mean is their FICO score. That is set by the Fair Isaac Corporation. The average credit score in the United States is about a 690, 695. But good credit is considered to be, as far as FICO scores go, 750 and above. I think if people knew how their FICO score is calculated, it would give people an opportunity to think more clearly about how they spend money and how they use credit. This, in turn, could give people the opportunity to enjoy the benefits that come with a higher FICO score. Benefits could include lower interest rates on mortgage loans and auto loans. And in the long term, that could save you a lot of money. Let's take a look at this graphic right here, which is actually directly from myfico.com. If you take a look, only 10% of your credit score is calculated via new credit, 15% for the length of your credit history, 10% for the mix of credit that you have, 30% comes from the amount of credit that you actually utilize, and about 35% comes from your payment history. If you take a look at this, it's actually a lot easier to see that obviously payment history, meaning paying your debts on time and in full, is the best thing that you can do for your actual credit score, for your FICO score. And remember, use credit responsibly. Hey, thanks for watching, and I'll see you next time.
Okay, well, there you go. I made that video. I like to make a lot of videos that are helpful, quick personal finance tips. So now that we know what goes into your credit score, let's take a look at a couple of things that don't go into your credit score. Quick share screen. CNBC had an article up today that I thought was really handy. And here you go. Your race, religion, sex, marital status, or any disability you may have does not go into your FICO score. How old you are? No. How old your credit is, how long your credit history does help determine your credit, your FICO score, but not necessarily your age. You could be 30 and have a 10-year credit history. You could be 60 and have no credit score. So it's everything in between. Your job and how much money you make. A lot of people think that how much money you make helps calculate your credit score. Granted, the more you make, you should have good credit because you're spending less than you make. You're paying down your credit cards, et cetera. But just because you make a lot of money doesn't mean you have a good credit score, because it depends on how you manage your credit. Okay, so interest rates. Okay, let's go back to any public assistance people receive. Public assistance does not determine or impact your FICO score. Where you live doesn't either. So it doesn't matter if you live in an upper echelon area or not. It doesn't really have an impact on you. Interest rates on your credit cards and other loans. FICO, when FICO calculates your score, they don't care if you're paying 17% on a credit card or if you're paying 4% on a mortgage. As long as you're making your payments on time and you're utilizing less, really preferably less than a third of the available credit line on your credit cards, then that looks good to them. Okay. Child support obligations people have do not impact it. Whether you're in credit counseling, listen, FICO cannot tell what's in your head, and they have no way of knowing if you're in credit counseling or not. And it's not any of their business if you have child support obligations. Now, I'm not saying that when you apply for a loan with a bank, they want to know about all of your financial obligations. But as far as credit scores go, FICO has no way to see child support obligations. So requests that you or your employers have made to see credit history, you are allowed to see your credit history, and that won't ding you. Your employer could look at your credit history. That won't ding you. The reason is, I hear what you're saying. You're thinking, but if you look at your credit history, somebody looks at it, isn't that called, a hard pull? No, it's a soft pull. There's a difference between a hard pull and a soft pull. Like a hard pull is, let's say you're looking to get an auto loan or a mortgage. That's a hard pull. A soft pull, the kind that an employer would look at, they're not really looking at the full, deep look of your FICO score. They're kind of getting like your FICO light score. And also, when you do get a hard pull, let's say you're applying for mortgage, typically in that month, for a month after, if you go to other lenders and they do a hard pull on your credit score, it's not, a hard pull hurts your credit score by about 5 to 10 points each time. But if you're going for the same kind of loan, like a mortgage loan, and you get like 4 hard pulls from 4 different banks, that's not the FICO is only going to look at that as one hard pull, because they understand that you're shopping at the moment for loans. So by looking at a few different banks and they do the hard pull, it's not going to impact you. Just they're going to look at it as one hard pull in your credit score. Okay. Request you. So information that hasn't shown up on your credit report yet. Well, that's an obvious one. If it's not there, it's not there. Information that is rolled off your credit report. If something's rolled off your credit report, it's gone. It's over and done with. And any other information that is not applicable to credit, where it doesn't show how you would use credit. So now we know a little bit more about your credit score. I think it's one of the most important things you could learn about. I think this should really be taught to kids in high school and college, because that's about, college is when you start getting hit up for sales pitches with your credit cards and how easy it is to have credit and all that. And a lot of kids get themselves in trouble. And you think, well, not my kid. That's not going to happen to my kid. But it happens to enough kids that it could be your kid. So we all have to really be careful. Just a couple of quick shout outs out there. I see there's a few people out there in Facebook land. Hey, Roberta, thank you so much for the thumbs up. Good to see you. Thank you very much. We've got a few people out there. Look, maybe the weather is nice today, so people aren't as interested in watching me on my live stream. Plus, it's kind of a flat day. No disasters. Listen, when the Dow is down like 2,000 points, I have a lot of viewers. People want to know what the heck is going on. They want reassurance, or at least understanding. They want to know. And that's all well and good. But I'm going to be here. I'm going to be here every single day. I'll make this as interesting as I could make it. Sometimes you just don't have a lot of interesting things. Hey, James. James is out there from Melbourne, Australia. Thank you, buddy. Good to see you. I was a guest on James Wrigley's live stream as well. So if you want to follow somebody, follow James Wrigley on LinkedIn. He has great content, great information. He's just a very level-headed, has his stuff together, and a wealth of information. And he's been doing what he does for a long time. So I want to thank all of you. We do have a comment out there in Facebook land. Hey, yes, Andrew, new cut. You noticed. Look at that. So yes, I got a new haircut. I remember I don't know if you were here on Friday watching the show. I took out my buzzer and I was like, I'm not going to buzz my hair in front of you right now. But I said I'm going to either give myself an okay haircut or I'm just going to shave my whole head. I think the haircut came out okay. You know, I have grayish thinning hair. There's really not a whole heck of a lot that I can do with it at this point. But yes, Andrew, new haircut. Thanks for noticing, man. You it's so funny. All right. I'm going to let you guys go. I'll speak with you soon. If you think of anything you want to ask me after the live broadcast, you can always ask me in the replay. And, if you have peeps in your life who would be interested in watching this live stream, either live or in the replay, let them know about me. I'd really appreciate that. And I'll speak with you. Thank you very, very much.